Hello and welcome to the FF News Virtual Arena. I'm your host, Doug McKenzie, and on today's session, we're going to be looking at mortgages in a very new and exciting way. And we're going to be looking at digitizing mortgages, but also really looking at them in a hybrid approach, like most of the things we're looking at in today's post-COVID world, or hopefully post-COVID world. And joining me today, I have three participants who are really right at the heart of that discussion. And joining me first is HSBC's Chris Pearson. Chris, thank you so much for joining us here today. How are you doing?
I'm doing really well. Absolute pleasure to join you today. Really looking forward to it. Thank you.
It's our pleasure. And Chris, for our audience who might not be aware, could you kind of detail us a bit about your role at HSBC, please?
Sure, yeah. I'll keep it brief. I'm the head of intermediary mortgages at HSBC UK, and I joined HSBC in 2014.
Amazing, Chris. Thank you. I'm so excited to hear some of the wealth of experience you've got in this sector. So thank you so much. And also joining us is FintechOS's Laurean Herepean. Laurean, how are you doing here today?
I'm fine, Doug, and thank you for your invitation.
It's our pleasure to have you on, Laurean. And Laurean, I'm so excited to get your perspective from FintechOS's kind of technological side of things here. So could you kind of tell our audience a bit more about yourself, your role at FintechOS, and even actually if you could start off with FintechOS and what you guys do first, please.
So I'm a digital product owner in FintechOS. A few words about FintechOS. So it's a Romanian-born company with offices in UK, Netherlands, and also US. We have some intention in order to expand in Asia, Pacific, Middle East, and Africa, North America. And our purpose is to become a global technology provider for banks, insurance, and other financial services. Me as a product owner in this company, I'm responsible with building innovation related to different banking processes, such as mortgage process, onboarding processes, and so on, so forth. So during this webinar, I will try to cover different topics. Probably will be a debate regarding different challenges from the business perspective, but also from the technical perspective.
Yeah, I think that's going to be so important, as you said, looking at that kind of embedded finance side of things, seeing that combination of tech and business into finance is going to be so exciting. So multimesk, and also joining us, we have Tom Hodgson from Trussle. Tom, how are you doing?
Yeah, great. Really good and happy to be here today. Just tell you a little bit about my role at Trussle. I'm the commercial director over here. What does that mean? It means I work with all of our partnerships in terms of how we both go to market, but then also how we partner and work with lenders or other providers and bring them into our digital mortgage broking solution in order to give customers the best outcomes.
Absolutely incredible. Well, Tom, thank you so much. I'm really excited also to hear that perspective too. I think all three of you combined is going to be a very interesting podcast here today. I'm very excited to get this wealth of perspective on such an exciting and forward-thinking podcast. So thank you so much, guys. Now, to kick things off, Tom, if I could come to you first. Mortgages are one of the largest financial products just a retail customer will use in their lifetime. So is that almost have I almost answered my own question? Why was there little to no digital growth pre-COVID-19?
Yeah, I think you definitely have answered the first part of that question. I think there's still a reliance on the human interaction because for lots of people, it's a sophisticated product and they want to be guided through the process, especially purchasers, first-time buyers, but also people that are going through that process on other periods of time as well. So, and as well as that, lots of referrals do happen from the offline world, so they're not being sourced digitally. So whether it's coming from word of mouth or estate agents or property developers, people start their mortgage journey often in that kind of environment and therefore aren't starting it in the online world, which has become so much more dominant on price comparison websites for, say, credit cards, loans, etc. But there are aspects that have been digitized well. At Trussle, we've been working on that for the last 6 years. Things like the online fact find, rather than doing 2-hour interviews in branch, being able to do looking at online credit pools, EIDV, so identification online and assessing affordability. There's lots of good stuff there and we've started to see that trend. But yeah, I definitely think that that the complexity and people wanting to make sure that they've been nurtured through that process is one of the big reasons for that.
Interesting. And Chris, if I could come to you as well, do you agree with Tom's assessment that maybe that there wasn't much digital growth pre-COVID-19, and now we're starting to see that really with the change in the branch relationship?
Yeah, I agree with Tom's assessment insofar as, look, the whole mortgage process is a fairly complex and sophisticated process. So it's not something you can just throw a bunch of algorithms out and think that's going to land nicely with customers. Customers will make their choice. It's a more complex product, and often that's been that they tend to want the comfort of some sort of human interaction through that journey. Certainly, if you're not a sophisticated buyer, at least. So I don't think it's accurate actually to say that there's been sort of no digital growth pre-COVID-19. It's perhaps not been as overt in terms of right at the front and centre of what a customer sees. But certainly an execution-only product where you're not really seeing advice in the process. That's generally speaking being broadly a digital online process. And we've certainly seen a lot of banks investing in the customer journey, in their platforms and process, and particularly we're seeing a lot of banks now investing in cloud-based platforms, which allows for a much more agile and faster digital journey. You won't necessarily see all that in terms of upfront journey, but it's sat there in the background to allow smarter digital processes.
Yeah, I think that's going to be so critical going forward, and I must apologise almost for Tom, because I think it was my words that said there had been no digital transformation until pre-COVID-19. And Laurean, Chris has brought up cloud. I'm also really interested from your side on that kind of back end, that tech side of things. Do you agree?
I'm agree with Tom about the fact that COVID act as a trigger for digital transformation, because even before pandemic began, technology in the mortgage industry was advancing and changing, but the process. But again, COVID-19 forced this thing happen quickly. Yeah. Before answering to your question, let's remind ourselves some of the challenging topics that the banking sector was facing during pandemic times. So we have, I think, four main categories. Customer service. Here, banks should maintain an acceptable service level across the value chain while processing, for example, increased volume of customer requests. For example, related to mortgage payment deferral programs. Another important challenge is related to the operation scaling. So, at this moment, banks should maintain access to services during these branch closures. More than that, they need to ensure, and Chris already said, need to ensure right technology infrastructure transition workforce to work from home, because we are not speaking to work from home only for the clients. Here we are included also the bank employees. More than that, I think that operation scaling is also related to creating digital capabilities for additional actors in the flows, such as brokers, sales teams, real estate agents, so on and so forth. Another challenge, it was about the product shelf. Yeah, so probably I'm a digital product owner. I'm not a real banking product owner, but I think it was a real debate inside banks about making decision if they want to continue with some lending products, if they want to change some mortgage products, or to reinvent or reintroduce some other characteristics for a particular product. And more than that, and this is the final point, I think that a new challenge, it's about adding some new information in terms of risk. And here I'm referring to, mortgage deferral requests. Yeah. So you need to have the right technology in order to address this kind of information. Yeah. So back to your question, it's obvious that before COVID-19, we did not face this kind of challenges. So probably, and there is an interesting word on the internet. The COVID-19 was the perfect storm for the digital transformation. These are not my words. It was stated by Joe Tyrrell, president of IAC Mortgage Technology. So
interesting, yeah, and I think to that point, Laurean, you've provided a very holistic view of the industry as a whole, and having to look at that internal side of things with, for instance, the employees having to work from home, and then also the changes to customer experience that have been birthed from that. You've pretty much answered my next question, and that was really how the industry had changed pretty much from post 2020. It's very easy to see things in decades, but now we're giving the time frame within a year itself, or 19 months. So to that point then, Chris, do you agree with Laurean about how the very system of buying a house has changed since 2020? Do you believe that there's been both internal pressures within a bank, but also just the very nature of changing a house, of buying a house has changed post 2020?
Yeah, I think the components of buying a house remain broadly the same. The way I see it, look, I don't want to go through the whole journey, but you find a house, you go to an estate agent, or you go online. There's plenty of online searches you can do. You go to a financial advisor, either in a bank or through a broker. Then they will find you the right lender. The lender will go through their process of affordability checks, etc. Give you an offer, it goes to valuation, goes to conveyancing, and then you kind of move in. So I don't think that's necessarily changed pre to post COVID. The components are the same, I think, but the customer experience of all that has actually changed. I think there's more reliance on video. A lot of us just simply haven't, one was legally not been able to get out of the house. So, these things have to continue. And we've seen very rapid moves to running contact centres from home. Who'd have thought that literally 2 years ago, but literally thousands of people now working from home in a very efficient manner. Lots more video than pure face-to-face. We're seeing more digitisation in the valuation process. So we're seeing more automated valuations. We're seeing more desktop valuations that can be done using technology that's available to us today. And we're also seeing more use of things like model data, ONS data that banks and lenders can use to assess customer affordability. I think there's less dependency on throwing pieces of paper around. I think we can use a lot more automation. We are seeing a lot more automation in the packaging of mortgages.
Yeah, and I think that's such an exciting place to branch off on, because you've been touching on those customer experience angles. Also employee experience, changes to their lifestyle, the fact that they can work from home as well, but also not being sent a wealth of paper through is such a huge thing for a lot of people now. And Tom, can I come to you and look at how that customer experience has changed? Would you say that it has improved for the better?
Yeah, so kind of as to Laurean's point earlier, Trussle were well set up for the second the pandemic hit. We've been trying to bring a lot of this process online as much as we could anyway, and so we didn't need people to go in or go anywhere physical, or give us physical docs to be able to take the process through. So customers could go online, fill in their information. They could use online portals to upload documents, which is much safer than photocopies and emails and the like. And so, but that kind of front end the process from our perspective, we were well set up for that. But we saw a big uptick in the amount of people that would coming to us because of the other channels being offline. And so in that process, we also saw the banks change. And Chris has given a kind of perfect answer around all of the different things that changed there. But things like a heavy reliance on ABM was really interesting to see during the pandemic period. It meant that often cases were starting to progress quicker through to offer, even when there were obviously challenges around demand. But as demand was getting on top of, and we saw ABMs go through, that was really interesting, because currently a lot of AVMs, some banks have up to 10 days or more as an SLA. So you just have this part in the process where things really stop, and what a customer wants is to know, can I buy this house? How quickly can I buy this house? Is there anything that's going to stop me buying this house? And the more that we can do to reduce that time frame, bring that down, bring speed and certainty earlier in the journey, I think that's the general direction that we'll need to keep going into to really nail this customer experience point.
Yeah, I think it's going to be huge. And with that in mind, then Laurean as well, you kind of in your holistic answer, you kind of brought up some of the customer experience angles. But yeah, are you seeing some improvements to customer experience in the mortgage process, and some of those really cool futuristic points that Tom was bringing up just then?
Yeah, and here I think that first of all, there are more online lenders today than even before. Yeah, this is an important fact, and I will tell you why. Because it's not only about the end customer, but it's also about the competitors. So I think banks should invest more effort in the digital transformation. I will share with you an interesting survey promoted by I already discussed about the ICA mortgage technology, and this survey addressed the different lenders in terms of how they consider that technology can help them in order to improve, for example, the mortgage application. And this survey put here 3 interesting benefits. The first one, it's about simplifying the entire process, and more than 74% of respondents say that this should happen in order to implement digital transformation. So I can give you a simple example from my previous discussion with different clients, and I noticed there is a high demand for these benefits. There is a high demand for mature technologies, I don't know, such as OCR, face recognition, liveness, video capabilities, digital signature tools, and so on and so forth. Another important thing here about the customer experience, it's reducing time to close. Yeah, and probably here, and I speak from my experience, probably here it's about introducing some automated decisions during the journey. And again, and probably this will be a debate here. The banks, but also the technology companies should find that trade-off. So when we are speaking about automated decision, probably this automated decision could not happen in, I don't know, 100% without human, let's say, interaction. But an example here for reducing time to close would be some decision models that would be implementing during a journey. And I think, and this is the last point, another important aspect that should change the customer experience, it's about minimizing data entry. Yeah. So here probably we will have a discussion around the integration, but this part probably will increase the customer experience in the new context.
Yeah. Having that automation is going to be, it's so important going forward on both sides of things, especially the operations side of things. And Chris, with that in mind, then can you tell us about the self-service approach versus the kind of assisted approach, please?
Yeah, I mean, I'd probably go back to, customer choice is absolutely key here. Right. Whatever we build, it's about what the customer wants and how they want to interact with their lending partner or their broker. And I think digital disruption or disruption of any nature is only such if customer adoption takes up that type of technology disruption model. So, for example, when we look at open banking, I think open banking has the potential to really enhance the customer journey. But as I said, it's quite a disruptive technology per se, but only if a customer feels the need to take it up. We had some great open banking tech which allowed self-employed customers to upload their bank statements, which would allow them to almost halve the customer journey, halve their time to offer, and take out literally swathes of paperwork. And the take-up of that was extremely low. I'm talking single-digit percentages. So I think there's quite a bit of work for us all to do in the sector to get customers more attuned to the benefits of open banking, for example. Yeah. Execution only has always been an area that's been digitized and automated, but certainly what you find with execution only, certainly in our experience, is customers are still looking for that little bit of customer interaction as well, just to have that sort of soft, gentle guiding hand through the journey. Customers do tend to phone you or come on to live chat to sort of get that little bit of a helping hand and almost double check that what they're doing is the right journey.
Oh, yeah. Now, with that in mind, then I'm coming back to you, Laurean, because I want to know: do you think that a mortgage, you're kind of sat in the middle here, can a product that is important as a mortgage be just fully digitized, fully automated, or are we going to have that human element, that video element, where we can help guide people through this process?
Probably the second option, Doug, because okay, I'm a digital product owner. I can say that if I will try to give you an answer from the technical perspective, yeah, the flow could be self-service from the beginning to the end. Probably could be a debate here around, I don't know, that part with that stage from the process related to underwriting, maybe to that part with the house visiting, selecting the house, but in fact, I'm agree with Chris. The human touch will remain probably critical to build trust. Okay, as a bank, you want to save human involvement for where it counts. Yeah. Okay. You can digitize document uploads, ID verification, I don't know, different form signatures, but I think that this human touch should be preserved in a mortgage process, because it's a complex one, and as I told you, it's about building trust. So I don't think that the key differentiator for a bank is to compete on rate or technology alone. I think that competing as a coach or as an advisor, this could be the key success. I had a lot of discussion with different clients. Part of them request me, for example, to not have this kind of human interaction, and I'm not referring here to video call or to for example to have a phone with a bank representative. I'm referring here to co-browsing. This is an interesting capability where you can bring more than one actor to the same table. So because the mortgage process it's a complex one. So again, I think the approach will be a combined one, assisted together with self-service.
Interesting. Now, with that in mind, then Tom, obviously we've heard from Laurean and Chris there, but from Trussle's perspective and from your perspective, are omni-channel hybrid mortgages potentially the way to go, having that face-to-face, and I'm interested in Trussle's positioning in this sector going forward, looking at that digital element.
Yeah, well, you had a full house on the last question around having to have this mix of I won't want to say face-to-face, because I don't think it's face-to-face, but it's a human interaction match that's enabled by great digital experience and technology.
Yeah.
And it's also important that this is a regulated product, and we want people to get financial advice in this process rather than to self-select if they've not got the knowledge to do it, or just to have don't appreciate some of the differences they can do. They've got some protection if they take financial advice and it turns out to not be the right decision. So pushing everyone down to an automated execution only route would probably end up in a worse place for the customers overall.
Yeah.
And so we really think it is that when you say omnichannel, I just think it's the approach of allowing a customer to deal with you however they want to in different situations. And so for Trussle, that is trying, we had completely pivoted, previously been completely, everyone has to interact online, and that's the only way that you can come through the journey. Now at Trussle, what we'll do is we allow customers to come to us however they want, whether that be online, by phone, by web chat, and they can start the process and manage it through that how they want. So they have the opportunity of digital experiences the whole way through, whether that be the application process or documents or updates. But if they want to speak to someone, then we'll always make that available to them as well. So I think that's going to be that part's really, really key. It's about getting customer choice and matching it with them being able to select how they bounce between these channels in order to go through the process. And it might be that they do use both or a combination rather than just one.
Yeah, and this is what I'm really getting from this conversation, because all three of you have been echoing it, and it's so brilliant to hear. Having done a number of finance podcasts, is this really does seem to be a time where everyone is looking at the customer journey in its entirety and looking at that and actually having choice and that journey at the forefront of decision-making power and decision-making choices, Now, with that in mind then, Laurean, we've focused a lot on the customer journey then, and their kind of choices and how they take that, but how are we actually utilizing the technology? Chris brought up cloud earlier on in the conversation, but how do you see technology being used by traditional lenders to accelerate the digitization process?
First of all, let me reiterate again the value proposition from the customer perspective. So, first of all, it's about, and you will see exactly, for example, in my case, how FintechOS can respond to this kind of challenges. So we discuss about reducing time to close in a process, simplifying the entire process, and more than that, minimize data entry. So we consider that FintechOS it's a customer-centric platform for banking and for insurers that can help build smarter products, personalized experience, and reduce cost with an end-to-end digital transformation. And here I will try to not go in so much details from the technical perspective, but
let's look at it from a kind of a holistic point of view.
Mm-hmm. And what I can tell you is that we have the innovation studio. In fact, this is FintechOS low-code studio that allows non-technical users and fintech developers to build software from scratch or extend functionality on top on the out-of-the-box accelerators that are available in our marketplace. So in this manner, the bank reduced time to market, needed to tailor products and customer experience into, for example, unique big offerings, or design your own products as a bank. More than that, I speak about simplifying the entire process, and here I think a great technology should provide different automation blocks. It could be some pre-built functionalities that can allow you to assemble a customer journey in a fast and reliable way. And I'm referring here to biometrics capabilities, OCR, liveness, face recognition, digital documents, for example, e-sign, video calling, co-browsing, customer personas. And this one, I think it's one of the most interesting capability, because in fact, customer persona, it's related to the way of hyper personalized the journey. Because using this kind of capability, you could define personas for different paths in the same journey. And I will close my answer with that part related to minimize data entry. And here I'm speaking about integration. So technology should provide extended capability in order to integrate, for example, third-party providers. And just to be clear, I'm referring here, for example, to different credit score providers such as Herepean, Equifax, TransUnion. So you as a technology, if you will provide the customer journey, you should have the capability to offer this in a easy manner, this kind of integrations.
Yeah, I mean, it's kind of feeding back off what we've been discussing with open banking being so critical going forward, and being able to allow those partnerships to continue. And I mean, so looking at that kind of more on that tech side, then Tom, if I come to you, and then Chris, I'm going to come to you with our next question. But Tom, what significant technologies are you seeing to kind of help really create a digital platform for mortgages? I mean, as Laurean was saying, there was automation. Chris has brought up cloud before. Do you think it's a combination of the two?
Well, one of the things that we kind of see a lot of in the broker market in our interactions with lenders is the development of APIs and use of APIs into the system to allow data to be transferred more smoothly from one process to the other. And there's several different tranches of APIs that have been developed. I think firstly the banks went with the execution only pieces, and they've integrated with PCWs and the like, and they've worked pretty well. And it are probably the gold star of how you would want that process to work, because it feels really smooth. The second part of the API process has been being able to do full mortgage applications rather than rekeying into multiple platforms to get a result, and being able to take that data from one place to another. Now, from a customer's perspective, they will really not see too much of the benefit from that, except for they would hope that their broker would be much quicker, but they won't necessarily feel that benefit. Then the next range of APIs, which we're starting to slowly see come to the market now, are the ones that are for the DIP part of the process. What that means is that customers can get decisions in principle, and then they have much more certainty about their case earlier on. And if you are allowed to, if you can do a DIP process automatically with data you hold, from a broker's perspective, if we could do that across multiple lenders at a point in time, we can really give a customer confidence that they can get a mortgage, and at what rates and at what mortgage amounts. And so that's one of the ones that we're most excited about, with working with lenders to be able to bring kind of DIP certainty at the point of advice, rather than it being a safe check as you put the case across to the lender. That could really change their use in the market.
I think that's going to be just really exciting, and I think you make a good point. It's almost the customer doesn't need to be aware of the open banking kind of protocols. It's just you present them with that openness, you present them with that choice, and that's really the value added from that. Now, one of the significant value addeds I think we have mentioned before, Chris, would it be fair to say that the traditional lenders, the traditional banks, are better placed to leverage the technologies that we've been discussing, the customer experiences that we've been discussing, due to being able to leverage both real estate and digital channels at the same time?
I think I described incumbent lenders as relatively well placed. Let me put it like that. And there's a few reasons for that. I mean, we've talked about some of the investments that are already being made that are probably not as overt in front of a customer, but certainly in the background, there's a lot of millions of pounds being spent in, as I say, we've talked about cloud-based architecture, APIs, as Tom mentions, Laurean's mentioned lots and lots of areas that banks are already investing in. Robotics would be another example. AI, I can give you an example of AI just in HSBC globally. It's not just mortgages, but HSBC adopt AI for financial crime checks across the globe. So the scale of that is vast. So we'll do in any given month something like 600 million financial crime checks using AI. Again, that's not something necessarily a customer or anyone on this call would necessarily see, but it's a huge investment. So why are we well placed? Look, banks have, we've got strong capital bases, strong liquidity to deploy new technologies and invest in customer, invest in pricing. We've got a large customer base that we're in touch with all the time, and we can use a lot of great mechanisms and methodologies to ensure that we're keeping in touch with those customers and really understanding their needs to a finite degree. And I think the other thing I'd say is you've also got a trusted brand there as well that customers can resonate with. Some of them have been there well over 100 years. So again, that brand, I don't think we can walk past that as something that customers will often look towards.
Yeah. Now, Chris, almost on the flip side of that then, I know we've got the atom banks of the world, but how long till you see the neobanks actually firmly establishing themselves, almost as a kind of, as I was mentioning, a riposte to your answer there, but obviously they've got less of a brand or less of a kind of trusted brand due to how recent they are. But how long do you think till we start seeing it being a commonplace offering?
I think we're already seeing it. I think if you look at the VC sort of ecosystem at the moment, where's VC investment going? Depends on which numbers you read, but I would say about a third of all VC in the UK is going into financial services.
Yeah.
And of that, about 10% of revenues is coming through the fintech sector. I can only see that starting to grow, and we're seeing examples of new neobanks, as we put it. So that's the likes of, for example, of Starling, whether we classify them as a neobank or a new type of bank, depends on your definition. But we saw Starling acquire Fleet Mortgages recently, and I think we're seeing some valuations of these new start organisations that I think will require some impetus through the P&L and their balance sheets, which I think needs to have some sort of mortgage growth on the books. So I do see that as a growth market for them in terms of investment in mortgages.
So, Tom, could I ask then, with that in mind, after we've heard Chris talk about the neobanks or the fintech banks, start pretty much being established now. We've seen Starling, for instance, Atom Bank, and also the traditional lenders also being quite secure in their offering and their branding. I'm interested to see, from your perspective, Tom, how banks can actually strengthen their competitiveness in the mortgage lending space. Now we're going to get more entrants into the scene. Where's that competitiveness going to come from?
Yeah, so I might sound like a broken record on this, but one of the things I think is going to really differentiate the market when you look at the American market, for example, is bringing pre-approved mortgages right up to the front of the journey. If that is the place that we want to get to, lots of stuff's going to need to happen for that to enable that. And we've talked about it with the open banking API, how we can make decisions much quicker, perhaps they're indicative decisions based, subject to evaluations, or perhaps we go fully embrace online value AVMs and the like. So there's lots that would happen, but I think that's the kind of general direction that we would want to be going into. And Trussle recently did a 5-day speed promise where we offered customers to get a mortgage offer in 5 days, or we'll give them £100 back, and the take-up was really interesting. People were willing to go for that because it really takes that thing, and I think that shows a piece around customer demand and customer appetite. And so I think that's where what we will see is mutually, and this is not just at the banks, it needs to be at their distribution partners, so brokers as well, enabling much quicker outcomes, to try and make the whole house buying process, which is on its own is long, but try and speed up the financial aspects of that and the financial decision making process, and then we can battle conveyancing after that. But I think that's where I would see the biggest benefit that we could get from banks is that piece around speed.
Yeah, interesting. And Laurean, would you agree that speed will be the KPI of the future?
Probably this one will be one of the KPI, because it's not only about the time to market. For example, probably the innovative use of data will be another KPI, and I will give you a short example. So at this moment, we all of us know that in terms of scoring or rating the client, we are using different credit score providers. But what about rating a client using some other data, for example, I don't know, some social network data? And I think this could be an interesting KPI in terms of using data for the next year, not tomorrow. Probably another KPI is about hyper personalization. So as a bank, you need to understand the customer need in order to provide the right product for that client.
Yeah.
I will reiterate what already Chris said about the migration to the cloud. Yeah, many institutions should carefully weigh the data security and privacy concern with their legal and compliance team regarding this decision. Another interesting KPI is about integration. Yeah, so probably, and here I'm not speaking only about the customer experience, it's also about the bank employee. From my perspective, probably as a bank employee, you should have one single login, and this login will give you access to different information in order to, I don't know, to solve an application.
Interesting. Now, Laurean, yeah, I mean, well, yeah, sorry, you have one more?
No, probably because I'm finished. It was one single mention related to the fact that I think that this battle between neobanks and traditional banks should take into consideration also the technology companies. I think it's just a supposition that in the next years probably the technology companies will become fintech companies. Yeah, because in fact this will be the key differentiator. So they already have the technology. Probably they will need to have the processes and the money in order to become a fintech or neobank.
Yeah, and I see that embedded finance route is going to be very interesting going forward in the future, because interesting, we haven't brought up, no one wants to buy a mortgage. I know it's a cliche, everyone wants to buy a house, you use a mortgage to get there. I think Laurean and Tom, I think your 2 points about speed and also the use of extra data and alternative data is going to be so critical to the industry going forward, mainly for a consumer point of view. But if I could wrap then, Chris, and come to you and see your version of the future of the mortgage. We've heard some of the technologies from Tom and Laurean there. Just to wrap up, what do you see the future of the mortgage?
I see it as sort of steady, controlled change, to be honest with you. I think, I agree with both the gents really in terms of where we're seeing sort of fintech move. And I think we're going to see more collaboration perhaps with sort of embedded lenders. And now they've got more agility through sort of cloud-based computing and the ability to sort of link in certain component parts of that through APIs, methodologies. I think it's highly likely we'll see a little bit more collaboration in that space. I read a report recently. It was a Capgemini report, actually. It was quite an interesting view on sort of what bank CEOs are seeing and what fintech CEOs are seeing. And it's very interesting, the areas of overlap and agreement that we're seeing in those spaces. So I think you can get increased agility. We can see new products and services getting to market a lot faster as well. So I can certainly see that. I think the point around speed is really key, but we need speed through the entire journey, not just can we get an offer in 5 seconds. That's great. But can we get the overall process? And we need to make sure that all the journey owners, including conveyancers, as Tom probably just hinted at earlier, are also on that journey. But that's not for me pointing the finger at anyone in particular. I think collectively as an industry, we need to make sure we're making the right investments in those areas.
Yeah, and I think that is a good point. I'm sure that's also what you were meaning as well. And I think Laurean's point as well, using that element of alternative data means that you are going to get those instances where things are maybe a bit more secure, a bit less risky, and you can bring them on at speed as well. So guys, I think we're going to wrap there, but I just want to say a massive thank you. I know we've overrun slightly, but it's been absolutely insightful hearing all your perspectives on this, and I really think it is a vertical of finance that is just shifting unlike anything we've seen before. So guys, just a massive thank you to all of you, and also a massive thank you to our viewers as well. You can obviously catch the rest of the series and much more over at ffnews.com, and of course YouTube, but especially LinkedIn, where you'll see me in the comments. Guys, Chris, Tom, Laurean, it's been an absolute pleasure having you on the show. Hope you've had a great time too, and well, goodbye.
Thanks.
Pleasure.
Bye bye.